Good afternoon. This is Brian Shannon from AlphaTrends.net. Today is Tuesday, the 15th of January, 2008, and the market's closed. The low volume rally that we saw developing, and that I cautioned that low volume meant an absence of really sellers the last couple of days, turned back into some severe selling here today. The inverted head and shoulders pattern that we were looking to potentially set up never followed through. And as I said, it really needed to get above 143 to validate that pattern. So hopefully you didn't take that as a bullish signal. As I said, the market is in a downtrend, and these consolidations in the downtrend typically resolve themselves in the direction of the primary trend, which is, again, very clearly lower here. If anyone doesn't understand that yet, then maybe you shouldn't be involved in the market. And based on some of the emails I get, the bottom is a process. It takes a while. There's no reason to look for the bottom here. The bottom will show itself very clearly in hindsight. But right now, what we look for is we look at these shorter term time frames and look for evidence that maybe the market is finding some support, which it looked like it was doing yesterday, and then look for price confirmation before we get involved and actually trade it. There was no reason to be involved, and I said if you were going to take any long side trades, that the right way to do it, in my opinion, was with call options, because that definitely does give you the ability to minimize any losses that you have. And clearly, when the market gapped lower this morning, it took that important level of support with it at 140 that we've been watching. And we've got this 5-day moving average still rapidly declining. Now it looks like we're going to probably shake out below these lows in here, below the 137.75 or so that we saw last week. It's possible that we get a little push below the lows from last August, when this whole subprime mess really started to show up in the markets. And then we get a rally, but that's going to be something only for the most aggressive and most disciplined traders. Any upside trade, like I said 2 days ago, when I mention upside, it is within the context of a primary downtrend, and it makes it very high risk. If you look at the weekly time frame, this is the level we've been looking at as our ultimate target, down near 135, 136, and the market is getting closer to that level. So that's the good sign. It doesn't mean that's a level to buy, but that is a potential area. If we also look at this low here and drag the Fibonacci tool right up to that high, you can see that the 2/3 retracement comes in at about 136. So 135 to 136 is where it looks like this market ought to continue to head down towards before there's the potential for support to be found, which ultimately may lead to a bottoming process. But it definitely doesn't mean that's where you want to be a buyer. Any buys that you make should be made on a 1-minute time frame. And here, with a daily VWAP heading lower all day, there was really not much reason to be involved in the long side. And if you were fighting the trend, not only of today, but of the last couple weeks, month, and now we've got pretty much the last year. We're at levels almost not seen since close to March of last year. So this market is continuing to inflict pain upon the bulls in here, and the absence of supply that we saw on that rally came back into the market here the last couple days as it found resistance at the declining 10-day moving average, which is below the declining 20, which is below the declining 50-day moving average, which is below the declining 200-day moving average. When these moving averages are trending lower, it means that, again, the moving average is nothing more than a mathematical trend line, and it's pointing lower here. So these trends are lower. You can look at this as the longer-term trend. These are shorter-term, intermediate time trends on this daily time frame. So the semiconductors continue to get beat up here, maybe trying to find some support above that 350 level. Intel is reporting earnings here any moment. I'm not going to try to analyze those numbers. Let's just look at the reaction. But there's a lot of supply in these semiconductors. A lot of people still looking to get out on rallies. You look at this level here at about 365, 367 prior support. Should act as resistance if the market gaps up on earnings related euphoria because of Intel, look for this area to potentially be an area where supply comes back into this market. It's not likely that we'll see a turnaround based on one company's earnings, but Intel is widely watched, so keep an eye on it, and perhaps we get a turnaround, but if so, most likely it's going to be a short-lived event, because this downward pressure here in the longer term is really what takes all precedence right now. Put your opinions aside about what you think might be a good company, and remember that there's no good stocks. There's only good trades. Can you get in and get out? Do you get in and take your profits when they're there? The supported 73 obviously was broken a week and a half ago in the IWM, and this continues to be the worst group. We saw the same thing here, a couple days of firmer prices. However, the lighter volume put that under a cloud of suspicion. Again, low volume rallies in a downtrend view very suspiciously. It means there's an absence of demand, and basically the sellers are just taking a day or two off so they can put shorts out at higher prices. And I don't mention them a lot because I'm not trying to tell you which trades to take. But look at the inverse funds, the TWM. This is the double reverse Russell 2000, and clearly it's breaking out here. We've got the same exact pattern inversely. We've got an increasing volume as the inverse Russell rallies, and low volume on the decline, and then a renewed volume once again here today. Same thing goes for the SDS, which is the inverse S&P 500. Again, I'm aware of these, so and I trade them, but I'm not here to give specific advice. I'm here to help you, basically guide you through these markets and help you with your timing of when to be in and when out, when to be out of the markets. The IWM, though, looking at the 10-minute time frame, it looks like we'll probably test these lows. I would think maybe tomorrow near the open we get some panic. Let's see down near 68.5. Of course, Intel's gonna could delay the test of this level, but I think a test of this level is inevitable. And start to look at these hourly time frames. We're starting to see some potentials for MACD divergences, which have been very good trades here. As they set up, I will point them out, and you can see the same thing setting up potentially in the S&P 500. That if we get a lower low here, it looks as though this MACD probably won't go down as long, and that has typically been a good signal for a trade, like we saw right in here, this MACD divergence. So I'll keep you posted on that, but let's take a look at the NASDAQ 100 now. The Qs were down $1.32 or 2.7%, and the daily time frame here, again, this 48.50 is the key level of resistance in this market. It broke through that a week and a half ago. It stays stuck below that 200-day moving average, and just really no signs of a bounce in here. But this market, this 48.5 looks like the next important level as this market stair steps lower. We saw that this high, then we saw a lower high confirmed right here, and then as this support was broken, we saw the lower lows. So that support ought to continue to act as resistance going forward at 48.5. So if somehow it can get back above there and stay above there, then we're going to be in a more neutral environment. But it's way too early to be calling for any kinds of a bottom here. This downtrend really is just kind of confirmed itself on all time frames. So there's still the potential for a lot more pain ahead. So take this seriously and continue to trade very defensively. The low volume rally that we saw in the Qs, yesterday was up, what, 1.5%, and these rallies in a downtrend do occur, and they take a lot of people off guard, and those people end up spitting the stock out at lower prices. Now, we did see a lower low here in the NASDAQ. It recovered late in the day partially, but you can hardly call it a victory for the bulls, as all it did was run right back up to that daily VWAP and then find more selling. Once again, the direction of this daily VWAP was lower, so prices were rejected by that daily VWAP here late in the day, and we are seeing a divergence set up here because we have a lower low and this MACD divergence. So it's potentially an area where we might see a turnaround, but you don't buy because of a MACD divergence. What you do is when you see a MACD divergence, you look at shorter term time frames for evidence of a potential bottoming process where the buyers may start to gain control, but there is clearly no evidence of that on any time frame here right now. So keep your eyes open, keep your stops tight, and be very careful.